and welcome back to Shifty FX. What I'm going to do for you today is give you a brief breakdown of how I've managed to capitalize on 5.8R on this GBPUSD trade. And again, it's just the same thing I preach day in and day out on this channel. Okay, using a 2-candle theory. What the previous day printed is what you will trade coming into the morning on the current candle. Okay, well, we see Monday pushing aggressively to the upside, Tuesday giving another bearish candle close with a good tail rejection over here. Understanding that I will likely draw on liquidity from external to internal. Market's probably going to target this internal. There's no need for it to just turn around here and target the swing. So that's our target. Our short-term target is this daily fair value gap within the premium zone. Okay. So where do we want to capitalize on the trades? Again, I've shown this in previous videos. Underneath the midnight open within our 2 standard deviations of the Asia range. So midnight open. 2 standard deviations of the Asia range. Where is the most obvious liquidity within these 2 standard deviations? This is a clear swing, and this is a 4-hour fair value gap. Market then gives us a fantastic rejection, giving us a good understanding that we're pushing to the upside. So, previous videos, we say we want to see a dynamite candle. I know it seems rudimentary, but it works. Okay, market does that, gives us a strong rejection to the upside. Unfortunately, this candle taps into the fair value gap and closes down, giving a wick. At this point, we just sat on our hands and waited for added confirmation because we were unsure if market is going to respect this and then move to the downside. Well, this was me personally. Market then pushes up aggressively, tapping into that 1 hour and then coming back to retest this order block. At this point, there's no question about it. I'm getting in the trade if I see a good reaction out of that level, and that's exactly what I got. Market then gives a good bullish candle close. I wait for it to open. Market execute with stops below that low, riding up, and like I said, giving a 5.8R. I closed out 80% at 3R above the Asia range and letting the rest run to final take profit within that daily fair value gap. Okay. Bias and narrative, same thing I preach over and over and over. It's really, really simple, guys. Okay. We have another member that capitalized on the 5-minute. If you want to drop down your lower time frames and gain a bit more experience, you can see here market pushes down, sweeping liquidity, pushes down again, sweeping additional liquidity. At this point, we see a change in the state of delivery. Once that closes, you could have executed on the retest of that or on the breakout. Right. So let's say you managed to get in on the breakout of that candle, riding momentum to the upside, giving you a clear 5R trade, knowing that we're pushing into that daily fair value gap. Now, how do we manage to forecast this? Well, simply put, like I showed you on the right, internal to external, but in the outlook, we also discussed the possibility if market didn't trade up, respecting this fair value gap and pushing towards this external range liquidity here in this swing and inverts this daily fair value gap, we would look to target this weekly fair value gap at the downside. And that's what happened. So putting 2 scenarios in play. Okay, we had a strong reaction off of the daily on Friday. Monday opened up, closed aggressively below that level, and then we saw a retest of that level on Tuesday, giving added confirmation that come Wednesday, we're looking for further sells. Lowest hanging fruit being the previous day's low, relative equal lows over here. Higher time frame objective, internal liquidity being this weekly fair value gap. Okay, another member managed to capitalize on EU this morning using SMT, your divergence. Quite simply said, Asia range not taken here, Asia range taken on DXY, and Asia range taken on GU. Okay, that's it. It's just divergence. And how this trader managed to get in, a little something we call shift blocks here. I won't get into great detail about it, but essentially it's just understanding that everything you need in your execution plan until you gain a bit of experience is in this market structure shift. This entire block over here contains everything you need. Your breakers, your inversions, your fair value gaps, your unicorn patterns, everything you need. Once market closes above that, you can just get in on the retest. Until you gain that experience figuring out what edge you want to trade, just keep it this simple, guys. Now you could get in on the breakout of that, or you could get in on the retest of it. And there's your trade. And you'll see these occur over and over and over. The last thing you want to put emphasis on is your entry. Just work out where market's going, internal to external. Where's my draw on liquidity, okay? That's it. How did the previous day's candle close? And I'm going to continue with that momentum. And it's that simple. And then in this instance, you see a 15-minute trade under. We had our SMT. Market then breaks above, retest of that shift block. And again, like I said, you could sit here and try and pinpoint your fair value gaps, your breakers, your market structure shift with a fair value gap, your overlapping fair value gap, unicorn formation. Yes, you can overcomplicate it at times. Why not just take the simple approach if you know what your bias is? All right, traders, I hope that helped you out. Short, sweet, to the point, and we'll see you on Sunday for another Outlook. Cheers.